Good morning, everybody. This is RC with Retired by Investing, and today I'll be coming at you with another comprehensive market review. And today we'll be starting with the VIX. Basically, right now we're at the 16 level, and it seems like we could bounce from this support level in terms of the VIX. Now, for the VIX in general, that's a good thing because if you are trying to play biotechs or anything like that, it gives you some really good key areas to get in. However, just know that some of the market is extended for now, especially if you look at just biotechs in general. Um, in terms of the SPY, we are above all moving averages. My only concern is that this is a lower high from before, so we're in a kind of a downtrend trending line. So, in my opinion, I'm sitting on cash just because when we look at this, everything is pretty much flat and there's no direction in the market right now. So, playing in this environment, even though the VIX is very, very low, is pretty much a chop fest. There are traders who are thriving in this environment as they're buying pullbacks into the market. However, I want to let you know that if that is not your strategy, if your strategy is a breakout strategy, then you will get chopped up in this market because we are pretty much range bound and not doing anything else for a while. As for the RSP, like I said, biotechs are breaking out. You might want to either sit on the sides as it pulls back, just because if we just look at here, if you go XBI, this is pretty extended by all means. And although it can go higher, from a risk rewards perspective, I mean, I don't think there's much reward here for the amount of risk that you're going to be putting on. Anyways, that is pretty much the one sector that is actually holding a lot of things up. There's also banking as well when it comes to the RSP, but the majority of these stocks that are in those areas do not move much. They move about 2% a day, and so not much is actually going to hold weight going forward. In terms of the Qs, again, this kind of trend line is not that ideal. It's something where I feel if you are get or if you position really hard in this area and you get caught off guard, then you can really gap down really hard and lose a lot of money. There are some traders that have positioned themselves ahead, trying to get a position and then gap down really hard on the next day or the next week. So, in my opinion, until we start breaking above at least this high right here, I'm not really doing too much until that actually happens. Now for the Qs, the QQQE, I mean, we're pretty much there above moving averages, 50 is coming up. Everything's in a bull market. Now, however, I just want to let you guys know for all of the indexes that I've gone over so far, even if I go over the MDL, MDY, and the IWM, we are still in a bull market. The only difference is that when it comes down to the intermediate markets, especially in the intermediate time frame, which is this 50 SMA, which is the red line, a little bit of a pullback to that or even a little bit lower to that would be even better, just to reset some charts and to build healthy momentum going forward. In terms of the MDY right now, almost near all-time highs, getting a little bit of resistance. Until we break this, there's really not much to do, but we have been going sideways for about 2 weeks. Same thing with the IWM. I mean, a little bit of resistance in this area. Hopefully, if we break above, small caps can get a run for itself. But for right now, just kind of sitting, not really doing too much. And that's all I have for you guys. Take care and have a great day.